Today's sales strategy, Checkmate Selling. Hi everyone, I'm Steve Savant, host of the daily talk show, Let's Get Down to Business.
And I'm Don Prince, Senior Advisor to InsMark.
Don, today we're talking about a sales idea, but I noticed that you use a lot of language called Checkmate Selling. What is that?
Yeah, Checkmate Selling is the idea that you want to anticipate the client's objections before they raise them, or worse, they don't raise them and you never hear from the client again, or you never understand why the client didn't move forward. We like to think about what the client is concerned about, and as we develop the presentation, we're anticipating some of those concerns and developing presentations using the InsMark system to try to address those different
I noticed
problems.
you're using the Life Plan module from the InsMark. Talk a little bit about that before we get into the case.
Sure. The Life Plan module, it's also a separate system, and it's also included in the InsMark system. And what it does is it's sort of the basic presentation of the policy, how much you're putting in, what you're getting out, what the death benefits are, and it does it in a very simple and graphical way that people tend to like. It makes it very easy to understand.
I really like it. I think it really helps a normal illustration or proposal really identify the key issues that you want to show to the client.
Yeah, it really does. Let's take a look at it.
All right, well, Harvey Pierce, he's a doctor, he's 45, and he has a $500,000 policy, increasing death benefit with premiums of $23,717 for 20 years. He's using a participating policy loan, so when we're using indexing, we're using the participation loans in an index UL, and we're going to start taking actual policy loans out at age 65. Walk us through this redux or this summary statement.
Yeah, this is a great example of what Life Plan does to simplify the communication of the policy. And here you see on the left-hand side is the summary of pre-retirement years. You can see the cumulative premium on the 20 pay, $474,000. The cash value has grown to $948,000. The death benefit is $1.4 million. That's right up to retirement. Now here you have the summary of retirement years. With that policy, we can pay out in loans and withdrawals $3.3 million to the client. And at the end of that period, we still have a cash value of $787,000 and death benefit of $1.2 million. So it's a great summary of the pre-retirement buildup in the policy and then post-retirement cash distribution, cash value, and death benefit.
Actually, I love that. I think it's so easy to see and understand, and here's the best part. I think the client gets it. Now let's go to this basic, before we go too far over, I want to talk about this module itself because I want to look at what we are really comparing it to.
Yeah.
Tax-exempt account is at 3%, taxable account is at 6%, and a tax-deductible retirement plan is at 7.5%. And I want to show this graph goes from his age 45 to his life expectancy. In this case, we're talking about age 95. Now, at first, this looks like it's really not a complex graph when you understand what's going on. Walk us through it, Don.
Sure, and this gets back to the idea of checkmate selling. As good as the first graph was to summarize the policy, one of the things that clients might be thinking is, maybe I could put that money somewhere else in a different investment and do better. And so what this graph is attempting to show, it's our various financial alternatives module in the InsMark Illustration System, and this graph is attempting to show, can they do better by putting the money in a different investment? And in this case, various means we can show multiple investments all on the same page against the life policy. And here on the top left, you see this shows the cumulative payments, the 20 pay, $474,000 of total premium into each of the different investments we're going to look at, as well as into the cash value life insurance policy. Over here on the right, you can see this is the cumulative after-tax cash flow from the policy, $3.3 million. And it's showing that this is all about the cash value policy. You still have the $1.2 million of death benefit, $787,000 of cash. Compare that to this graph, which shows tax-exempt account, taxable account, and tax-deductible retirement plan. And here what you can see is these three different investments, the after-tax cash flow available is only $1.6 million for the tax-deductible retirement plan, $745,000, $710,000 for the taxable and the tax-exempt account. So again, these are producing half or less of the $3.3 million that is available from the cash value policy. In addition to that, all of these accounts get driven to zero while the cash value policy is still going strong here.
So they're taking distributions in this traditional sense, you're going to run out of money.
You're going to run out of money, and you're going to get a lot less money than if you take money out of the cash value policy.
Well, let's look at this. Here's another way to look at this. Walk me through this, because now we're using term invest. It's kind of term invest the difference in a qualified plan kind of a comparison. Walk me through that.
Yeah, again, back to checkmate selling. The next question somebody could have is they could say, well, this all looks great and it does very well against other investments, but why don't I just buy term insurance and put my money in a tax-deferred retirement plan? And so this graph is showing sort of the comparison of doing that against buying the cash value life insurance policy. And here you have, again, total premium in either plan, term in the tax-deductible retirement plan, like an IRA or so on. $474,000 is the same amount of money in a 20-pay going into that plan or going to cash value life insurance. The cumulative after-tax cash flow, I love this graph. What it's showing is you can get out $3.3 million from the cash value policy and only $1.5 million from the tax-deductible retirement plan before it's totally out of money. And here down here you can see the tax-deductible retirement plan is driven to a zero balance.
And no coverage.
And no death benefit.
Right.
And over here, because the term insurance is then forfeited, over here, even out at year 50, you've still got death benefit and significant cash value, even after paying out the $3.3 million. And that's, with that checkmate selling concept, we've anticipated them putting this money in other investments. We've anticipating the buy term
Invest the difference
concept.
Sure.
And neither one is faring very well compared to the cash value policy.
And again, we're just comparing objectively side by side. We don't really care who wins. The math is the math.
The math is the math.
This is why when we talk about checkmate selling, it really anticipates the objections and it actually answers them through mathematics and logic. Today's sales idea is brought to you by Ash Brokerage, the practice enhancement company.
And by InsMark, the most widely used software when it comes to strategies and presentations using cash value life insurance.